At the end of the 19th century, there was a man named John D. Rockefeller. He wasn't just another businessman, he was the man who changed the shape of the American economy and built a financial empire so powerful that people still call him the richest man in history. His wealth, adjusted for today's money, would be worth over $400 billion. But the real question is, how did he do it? How did a man who started from nothing end up controlling the entire oil industry and creating a fortune that no one has ever been able to match? Today, I'll tell you the story and the timeless investment strategy of John D. Rockefeller. Rockefeller was born in 1839 in New York. His father was a traveling salesman, known for being cunning and unpredictable. His mother was deeply religious and taught her children discipline, honesty, and hard work. From a young age, Rockefeller thought differently. When he got his first job as a bookkeeper at just 16 years old, he didn't focus on the small salary. He focused on the numbers, on profits, margins, and growth. Even as a teenager, he was thinking like an investor. When he reached his early 20s, Rockefeller decided to enter the oil business, which was brand new at the time. Most people saw oil as a gamble, risky, unstable, unpredictable. But Rockefeller didn't want to gamble. He wanted control. He realized very early that the one who controls the entire process, from production to distribution, is the one who wins in the long run. And that's exactly where his genius started to show. He didn't just run an oil company. He built a system. He owned the refineries. Then he bought the transportation. Then he controlled the distribution lines. Step by step, he built what we now call a vertically integrated empire. He owned every stage of the business, from the moment the oil left the ground to the moment it was sold. That meant he could produce at lower costs and earn higher profits than any competitor. This was one of his key principles. Never depend on someone else for your success. This concept, owning the full process, is what modern investors call vertical integration. And it's one of the most powerful business models ever created. But that wasn't the only secret. Rockefeller was also a master at timing. When the market was crashing and everyone was panicking, he stayed calm. He believed that the best opportunities come during chaos. He used to say, "The way to make money is to buy when blood is running in the streets." He always kept cash ready, waiting patiently for the perfect moment to strike. That's the second big principle. Always be ready for opportunity. Markets will fall, panic will spread, and that's when smart investors move in. Rockefeller understood that wealth isn't made by following the crowd. It's made by thinking differently when others are afraid. But perhaps the most brilliant part of Rockefeller's strategy wasn't about how he made his money. It was about how he kept it. He never kept all his fortune under his personal name. Instead, he built a web of trusts, foundations, and family structures that protected his wealth and passed it on for generations. This system later became known as the Rockefeller Trust Strategy. It was designed not just to make money, but to preserve it forever. Through this approach, he made sure his family would never lose what he built. Even today, the Rockefeller family still controls billions of dollars through trusts and investments, more than 100 years after his death. That's legacy-level wealth. Now, let's break down what modern investors can learn from him. First, focus on control. Don't just invest in random things. Understand what you own and make sure you have some kind of edge. That could mean knowledge, ownership, or a unique strategy. Second, diversification through structure. Rockefeller didn't keep all his money in one place. He built layers of protection, just like today's smart investors use holding companies, real estate, and trusts. Third, long-term patience. He never chased quick profits. He understood compound growth, that small, steady returns over time build massive wealth. And finally, purpose. Even though he was ruthless in business, Later in life, he donated over $500 million to education, science, and medicine. He founded the University of Chicago and funded medical research that saved millions of lives. To him, money was a tool, not the goal. So when you hear the name Rockefeller, don't just think of money. Think of vision, patience, and structure. Think of a man who played the long game when everyone else was playing short.